Okay, beautiful. Good afternoon. Welcome, guys. We are back. It is Dollars for Lunch. We have not had Dollars for Lunch in quite some time, and I'm super excited to be with every single one of you. So shout out, sit back, relax, enjoy, jump in the comments. If you are in YouTube with us, you are watching from our brand new social community, you are in the right place. So let's transform, let's get into it. And what are we doing today? So again, Dollars for Lunch, we're going to be focusing this afternoon on some fundamental data that's coming out. Now, I'm preparing you for the data that's coming out. We will be issuing trades on the social area based on the data that does come out, right? So let's quickly catch up with what is happening in the world. What do we need to know about? So we'll start off with some retail and fundamental data news. So let's jump in and let's have a look at what the world is busy talking about. So we got some target earnings data that came through a little bit earlier today, and that's obviously put a little bit of a secondary wind into the market step. At the moment, we've seen markets, pretty much indices, take a second breath of fresh air. Now, that's just due to some positive earnings from target side, and it wasn't all good, but they basically just smashed out some of their really conservative or really low estimates, right? So that is what we were seeing there from that perspective. Now, outside of that, we know that majority of the markets rally is sitting based on yesterday's CPI data. The big question is, what are we going to be seeing today? So again, just a quick recap. Markets are massively green across the board, and that is obviously due to that CPI data released yesterday. As I mentioned, Tesla up 6%, definitely noteworthy. Now, whether it's going to hold that is all going to come down to this next set of data we are about to receive. So that's what it's coming down to. That's what we need to pay attention to. That's what we are going to be paying majority of our attention to this afternoon. So we're talking about fundamentals. What are we talking about, right? So again, we've got some retail sales data that's coming out. Going to be super important to try and understand where the markets are going to be placing that data, as well as the PPI, right? So PPI is basically very much like the CPI, except this happens on a producer's level, right? So CPI is, measuring the inflation from a consumer's perspective. A consumer spending $1 today, how much has inflation eaten of that in relation to last month, last year, this time, right? Inflation generally, when ticked higher, or the CPI ticks higher, the dollar does better, but it's generally bad for an economy, and this means the Fed will come in and hammer down on the economy with interest rates, etc. We'll cover that in a separate episode in a lot more detail. What you need to understand is higher than expected CPI, higher than expected PPI, right? This is good for the dollar, bad for indices, bad for commodities, etc. Lower than expected shows inflation is cooling, and particularly in this moment in time, lower than expected has these massive rally effects on the market, because again, the knock-on effect is that the Fed will be less angry or less hawkish on the market, less likely to raise interest rates, and more likely to lower interest rates, which is good for spenders, good for households, good for anybody who needs credit, etc. So that is the general summary. Now, the very same thing can be said for retail sales, right? That little point of data right there. Retail sales basically show, is the American consumer slowing down on their spending, or is it increasing? Now, we have a very interesting sort of site for today. They're expecting, right, these economists, and I don't know who these guys are, but ultimately these economists are saying that, the retail sales is expected to decline by 0.3%. The core retail sales, now again, anything core just excludes food and energy, right? So we talk about PPI, right? Normal PPI year on year, month on month, that is everything. Core PPI just excludes food and energy. Same thing for retail sales. So even if they take food and energy out, retail sales are expected to have slowed down by 0.2%. So this is going to be very interesting for us to obviously see what comes out. That data is coming out in the next 25 minutes or so. And why this is so important is that if this data, as we saw with CPI yesterday, if this data comes out under expectation, there is massive opportunities for markets to rally based on this data, because then that is a clear sign we've had a clear CPI, a clear PPI, a clear retail sales. We haven't had that before, basically in this year, really, right? And the Fed is watching that to decide what's the next steps they're going to make. If we receive an under expectation on the retail sales side as well as the producer side, it basically signals to the market that all of the leading indicators outside of employment are basically ticking towards direction that should allow for Fed to kind of ease up and not be as aggressive on the data they need to obviously jump in and do. So quick shout out to everybody that's live with us. I know a ton of our people are going to be watching after the fact. I can see Rufus Chua is in the house. I know it's Rufus. We got Rishmi, we've got Musa, we've got Vusi, we got Chantel in the house. Just let us know where in the world you're joining from. Shout out. I know a lot of people are going to watch us in the community a little bit later. That's perfectly fine. So Dane, listen, this is great. Everything you've said, wow, whatever. But what does this mean for us as traders? How do we trade that? Well, this is where I get super excited and I cannot wait to get to. But first, if you haven't done so already, make sure you are part of our social area, right? It is super, super important. A lot of the launch updates that we have planned for today are going to be trickling out over this week. So you want to see all the new updates. You want to be a part of that. Super simple. Link is down in the description of this video. You're welcome to share this with absolutely anybody. It's absolutely free. And you can just literally jump in, share the link, and they're able to jump into the DVDM markets social area. Super, super important. We've spent a ton of time, efforts, prayer, money, everything else and above to make sure we can have this and really get this delivered to you guys. Now, enough about that. We've covered that already. What does it mean for you as a trader? What can we expect from the markets? That's what we're going to be looking at very, very shortly. So again, massive shout out to Drippy Pips for obviously making all of this possible. These trades will be provided inside the social area as they pop out. So again, you want to be part of that. You don't want to miss those trades. Again, probably supported by a pure STP brokerage, which is TDM markets where it's at. All right, so we're going to start off this afternoon with gold, right? I spoke this morning a little bit quick of a sneak peek around gold, that we're sitting at support and we could have, gold's, attempting to create this new sort of market structure. We're not 100% sure yet from a data perspective where that's going to lead us. We may end up creating something of that nature. Now, today, both gold, both NASDAQ, both US 30, both Euro USD, these are all going to be determined based on where the dollar goes this afternoon, right? So again, under expectation on the retail sales side, under expectation on the producers inflation side, this is going to essentially have a negative effect on the dollar. So quickly having a look at the dollar, this is the dollar index on TD markets. You can find it by opening up your market watch panel, and you're going to search for dxy.ts. If you've got a TD Max account, DXY is what you're looking for. And basically on the daily, or at least the 4-hour time frame, that is the cause and effect of CPI. So when the dollar drops, again, indices rise, gold raises, Euro USD raises, anything that has the dollar as the quote currency will raise, right? So again, Euro USD, if we have a look at Euro USD from yesterday, CPI came out under expectation, dollar dropped, CPI shot, Euro USD shot through the roof. So similar situation. Now for today, we already have, and we've issued a pending order. This is NASDAQ. We've issued a pending order down here below. Now, many people may say, but Dane, but why are we not trading, US 100 or NASDAQ at the moment? Why are we not buying it? Why are we not scalping it? When we have post CPI, post NFP, post any of those items, markets are volatile. Markets need to work out, was the data moving that they saw, was that valid? So we generally don't want to be caught holding a lemon prior to the next set of data, right? In the next 21 minutes, when we get that PPI data and retail sales, if it disappoints under expectation, which is what the market is supposed to be assuming here, we will see a major drop in market price, right? So our pending orders will be activated and we may send an additional order to enter manually, right? Again, we're not gambling, we're not guessing, we're not rubbing a golden ball live on Instagram prior to this and saying, everybody buy now. That's not how trading works, guys. If someone's doing it out there, tell them they're a fool. That's not how trading works. We're not guessing the market at this point, right? So we're looking for the data to come out. That'll be a confirmation of market structure. And if we get that break, right, we may then get the opportunity to enter a little bit earlier. And on NASDAQ, we may start to look for entries at that 15,883 level. So again, if you have a demo account or you're just starting out, you want to place these on demo, use the levels that we provide within Drippy Pips in the social area, right? So we may provide manual entries here. We are also on US 30. Very, very interestingly, I want you guys to have a look at this. We've identified that US 30 obviously had this rising wedge or this rising triangle, failed, really to get to the apex and really do anything there at the point of the apex. So if you look at this triangle, US 30, otherwise known as Dow Jones, on TD markets, you just search on your market watch for US30.ts. If you have a TD Max account, at the point of apex, failed to make it higher, but it's still respecting this level as we move through, right? And I want you just to pay attention to this diagonal. And I love the beauty of price action in markets. People say it's random. People say there's nothing random about markets, right? It's analysis, it's time, it's effort, but we can see what's happening. So I'm only a little bit cautious today, and I just want to state this. The reason why we generally tell people don't worry about the hype. Don't worry about the news. Don't worry about CPI, PPI, NFP. Don't get involved in the hype. Is majority of the time because we see inconsistent data or positive and negative data, right? So we might see as an example for today, we might see higher than expected retail sales data, but lower than expected PPI, right? That will cause the markets to react in a bit of a whipsaw, and the data might come through staggered. So you might see the one piece of data come through positive, and then a delay of 30 seconds, then other piece of data negative. So naturally, you can expect a bunch of buyers going to get into that market, triggered then oppositely by a bunch of sellers. And that's not a trade you want to be involved in. So what we would like to do and what we are going to be doing is we're going to wait for the data, come through, we'll digest, we'll analyze, we'll make it palatable. And based on that, we will have a trade that will last us over the next coming days, potentially even the balance of the week into next week. So a lot of the trades we're going to be doing, I want you just to keep in mind, will be multiple days that we'll be holding it. So this isn't a trade you want to be taking with maximum sort of margin. You don't want to be margining out your account in these trades. These are going to be swing trades that we can hold over days, potentially even weeks, right? So please pay attention to that. Don't go max lot size. This is not a lot size war in these trades. These are just about playing it smooth and simple, right? Another trade I want to talk about is Euro USD from a price action perspective, right? CPI caused that massive push off price, right? We know that everything that goes up must come down. And so what I'm looking for is, should we get, let's say, an overshoot, right? Or an undershoot, apologies, of the data. So underwhelming from that perspective, right? Euro USD will try and continue. However, from just a pure price action perspective, should we get the opposite reaction, right? We get a stronger dollar. So we get an overshoot of retail sales, because we know Americans have got zero problem in spending, and that's often the case. They overspend. Should we get an overreaction, higher than expected retail sales, higher than expected PPI? What will this do? It will boost the dollar. So Euro USD is then the perfect candidate for that boosting of the dollar towards the downside. So Euro USD very may well retrace pretty much all of its gains from CPI. So if you missed CPI, Euro USD has the potential to move 180 plus pips towards a downside, at least back to a known level, or at least back to a known fib level, right? So we could see a retracement at least, I would say 180 pips, so 78.6, exactly 180 pips to the pip to the dot, right? Now again, if we're talking about things here that you don't necessarily understand from a risk perspective, please remember the DVDM Markets Quantum Growth Academy is available in the social area. The first couple hours are for free there. Again, you want to get into Premium Plus, you want to get the full thing. You want to get risk analysis, risk management, you want to get psychology, you want to get all those other things and strategy that is involved and available to you in Premium Plus, provided you have a TD Markets funded account. So if you don't have a TD Markets funded account, guys, what are you doing? The only true STP broker in Southern Africa. Don't get caught up in all this drama with all these guys on Instagram starting up these entities, be booking, calling out trades last minute, blowing client accounts. They're eating their clients. You want to be at the STP broker that executes to AAA grade liquidity, such as some of the bigger names on Wall Street. That's where you want to be, right? Link in the description down below. Absolutely best service you are going to receive from a broker in Southern Africa. So that is an opportunity we are waiting for, and or potentially will issue. Gold, same story, right? If we receive that stronger than expected dollar, so higher than expected retail sales, high expected PPI, dollar will give us, gold will give us an amazing opportunity to short. We've already identified on 5 minutes that this rising market structure we've seen predominantly for the trading day today, that has started to break. We're not seeing increased volume tick towards the upside. So we're seeing at this particular point, just from a price action perspective, that buyers and bulls at this point are fading out. That can happen because of two reasons. Firstly, people generally do just get a little bit more cautious prior to news releases. That's normal, right? So that can happen just purely due to fear. People kind of sitting on their hands waiting for the data to come out. That's normal, but that's a good sign showing us that if we get that data positive for the dollar, we'll start to sell off here, and we may hold that long term, or at least for a good amount of pips into this afternoon. So that is the plan. That's the setup this afternoon. The trades are being set up as we speak. The trades are mostly already set up. We're waiting for the data. We'll wait to confirm a minute or two after the fact, and we will issue then trades, provided, there's a big asterisk here, right? Provided the data is sound, right? If we get a whipsaw, if we get conflicting data, that the market is trying to balance out what is more important. Guys, it's not worth trading, right? It's not worth even trading that data, right? I want to show you an example of why it's not worth trading that data, right? I want to show you guys last week in Premium Plus, right? While we were testing, while we were getting things done, right? I just want to show you guys something, right? Let me quickly show you. So this was last week, right? This is a trade summary for 5 trading days ago, right? Again, right? No news, nothing in the market, right? On Friday, the 10th of November, we bought NASDAQ, we bought US30, we bought GBJPY, and we lost a trade on ADJPY, right? But 4,753 pips for the day without any news whatsoever, right? Now, these guys online are guessing trades on indices and making 1,000 pips, and they're going on social media about it. We do 4 times that on a normal day. So don't get caught out on the hype. Don't get caught out on the clout. It's not worth it. Sit back, relax. We've got you covered with Premium Plus. Actually, we got you covered in the free environment. Premium Plus is just a major benefit overall, right? And so as we were testing last week, again, we were issuing out these trades. We've been testing and trading, right, on the back end, making sure everything is working. And we've been hitting TPs. We're making amendments to our trades, been fixing up, tidying up, cleaning up prior to the launch. But the launch is here and we are ready to go. So again, you want to get into Premium Plus, you want to get unlimited pips, unlimited opportunities. 2 very simple things that you need to do. First thing you need to do is open up a TD Market, fund and verify your accounts. Then Premium Plus is available to you for less than $1 a day. Everything unlocked, the courses, everything like that. Now remember, the shows dollars for lunch, the shows that you're seeing me right now, that will become a Premium Plus only feature in the future. The next week or so, that'll be a Premium Plus only feature, and then we will trade live in those sessions together. But as we're gearing up for the launch, we're allowing you to come in and dabble, ask type of questions, feel comfortable, make sure this is for you and this fits for you. If there's something else that fits out there for you, go for that. If this fits for you and it makes your trading life better, easier, simpler, and you understand and you're growing, then that's exactly where you need to be. This is home. Right, so to summarize real quick, I don't want to ramble, right? If we look at the markets and this data comes out positive, right? So if we look at the fundamental data, if this data comes out positive, meaning higher than expected, this will be good for the dollar, positive for the dollar. Good for the dollar means what? Means 2 things, right? Indices will fall, right? Dollar quote currencies, right? Such as Euro USD, they'll fall. Dollar base currencies such as USD JPY, they will rise, provided both of these numbers come out higher than expected. If these numbers come out lower than expected, this will be bad for the dollar. This will be good for currencies that have the dollar as a quote. This will be good for indices. This will be good for gold, right? So lower than expected here will cause indices and gold to rally, right? So again, you want to pay attention to that. If it's mixed, my personal recommendation, again, nothing we do here is considered financial advice, but my personal recommendation is that just sit on your hands. If the data's mixed, sit on your hands. No need to be a hero. We have the balance of this year. We're going to be trading out throughout November, throughout December. You will be banking money without a doubt with us, right? And that is an absolute guarantee. So if it comes out mixed, don't panic. Sit on your hands, relax, sit back, enjoy, learn, go through the academy, brush up on market research, whatever the case may be. Do your analysis, post some opportunities. That is what is available to you in the social area. If you have a look at when you're having a look at a post, there is a markets discussion area, right? So markets discussion is where you can come and post what you're thinking. Someone saying, hey, Tamilo saying GBP/NZD, guys, this is what I'm looking at. What do you guys think, etc. So you're welcome to post. A lot of people will jump in here, provide feedback, and help you along the journey, and that is what it is all about. Outside of that, guys, the team is standing by for this data to come out. We will then process and position us some trades directly into the social area. Other than that, guys, we hope you have an amazing afternoon. You know the drill. Be safe, trade safe, and until I see you guys tomorrow morning for pounds for breakfast, we're going to try have that out to you by 6 a.m. tomorrow morning. Until I see you then, you know the drill. Be safe, trade safe. As always, much love and goodbye.